Welcome to Ben Talks Money. Here we discuss stocks, investments, ETFs, and personal finance.
Nobody can tell you that the market is going to correct itself today or tomorrow. But there are a few signs that can tell you that this market is nearing a correction. In this video, I will show you a few signs that can tell you that the market is about to hit a correction. And I'll also give you a few tips that can help you protect your portfolio in case of a market correction. Hi, welcome to Ben Talks Money. My name is Ben. I have an MBA in Finance and Management. I've been trading for 8 years and I'm a full-time options trader. If you are new here, please subscribe to the channel, like the video, share, tell a friend to tell a friend. So the market is hot. We all know that. Most of us, our portfolios are at all-time highs, but we need to be mindful of a possible drawdown. Usually market corrections are about 10% at least. And even though most of our portfolios can withstand a 10% drawback, it will be prudent if we can protect the gains we've made so far so that we can buy more when the market drops. So a few things to look for that can tell you that the market is about to correct itself. Number one is a weakening in the market breadth. What I mean by this is that you see the market is going up, but it's not making huge moves as it used to make. You hear positive stories, but the market doesn't make any move. On the other hand, if there is a negative story, the market drops. That tells you that people are beginning to be fearful of losing the money that they've made so far. Because mind you, most of the gains that the market has been getting, especially in the past month, is because of FOMO. People who were sitting on the sideline and now realizing that they are missing out. They are pouring money into the market late into this bull run. So those are the people who are the first to get their money out. Let me give you an example. On Tuesday, there was a news about Oracle that they are struggling to sell the AI chips that they bought from NVDA to build their data centers. They are struggling to sell the data centers as well. And as soon as that news hit the market, the entire market, the Nasdaq dropped almost 1% on Tuesday before recovering. And Oracle was down more than 5% at some point. This is an overreaction, but the reason why this reaction happened is because Oracle has more than doubled. And the reason why the market dropped instead of just Oracle dropping is that some form of an entanglement between the tech stocks. NVDA has a deal with Oracle. You have OpenAI making deals with both NVIDIA and AMD. You have NVIDIA making deals with their competitors, taking a $5 billion stake in Intel. Intel is supposed to be a competitor. So all the tech stocks, they are so much entangled that one news can just unravel everybody, all the big seven. Maybe with the exception of Netflix. They are doing their own thing, they are in their own lane. But most of the tech stocks are in some form of entanglement. And one news hit, it can unravel all the gain. That is what we saw. That's the tip of what we saw on Tuesday with that Oracle news. Another sign that can tell you we are nearing a market correction is when you see a divergence in the moving averages. If you see that the 50-day moving average, which is widely watched in the market, is trying to trend downward, that tells you that there is a divergence in the market. There is probably going to be some form of a correction in the market. So you should be watching the 50-day SMA and the 200-day SMA. Those two moving averages, especially for the indexes, will tell you where the market is heading, whether this bull market is coming to a close or we still have room to go. The other way to tell is when you see the evaluations. There are so much crazy evaluations going on, especially in the tech stocks. You have companies hitting trillion market cap like it's not a big deal. You have companies trading 20, 15, 100 times above their earnings. I can give you an example. Palantir is so expensive if you look at what they are making compared to their evaluation. The same with Robinhood. But we as traders, we don't care, because all we care about is the stock is going up and we are making money. But if you are in these stocks for the long term, you have to be mindful. You have to pay attention to the chart. You have to pay attention to the news around them, because one bad news can just make the stock drop 15-20%. On Friday, there was a news about Palantir that one of their software has a defect and it dropped 10% on the spot. I mean, it bounced back, but because the company came out to say it was a vendor, it's not their stock, it was a vendor. But if it was indeed a default software from Palantir, just imagine what would have happened. Those are the signs that tells you that this stocks, this market is almost at a tipping point. The next one is volatility. One thing that you have to pay attention is the VIX. Right now, there is low volatility in the VIX, but one of the major indicators that there are about to be a market correction is when you see the VIX spiking. The VIX is the volatility index. If you see the VIX spiking, it tells you that there is likely to be a market correction. So how do you protect your account? How do you protect your portfolio from a possible market drawdown? There are a few things that you can do to protect your portfolio. First of all, you have to look at the metals. Gold, silver, copper, those commodities, those metals, they have what we call negative beta. A negative beta means they usually move opposite to the overall market. Gold has been going up a lot for the past year. It looks like people are positioning themselves. There's a lot of money moving from treasury bills into gold. So it tells you that people are positioning themselves. You have to hedge your portfolio. And the other way is to diversify your portfolio. Right now, I have a few stocks, a few tech stocks in my portfolio because they've gone up a lot. I've trimmed a lot of it because there's no fun in making the money and losing it. There's no fun in that. So you have to diversify your portfolio. Right now, I am in a lot of the healthcare stocks, your Pfizer's, your Moderna's, your UNH, and I have fewer techs because those tech stocks, those growth stocks, they tend to drop the most when there's market correction, and they tend to bounce back the fastest. So I'd rather trim what I have and get in when they drop for the huge bounce. The one way to do is to diversify your portfolio. The other way is to keep cash in your account. Trim. I said it about SOFI when SOFI hit $30. I made a video about trimming, selling some of the SOFI. And I sold most of it at $30.50. And it dropped from there to $25. That's a $5 difference. And yesterday, after the stock going down for 6 straight days, I look at the chart, I studied the chart. It was right at the 50-day SMA, and I got into SOFI. I've made more than 10% on the stock in 2 days. Options are doing incredibly well. So there's always opportunity to get in. But when you make the money, keep some cash, especially at this time. Cash is going to be king very shortly. So that's it for the video. If you are new here, please subscribe to the channel, like the video, share, tell a friend to tell a friend. And if you have any question, leave in the comment section below. And until next time, let's keep making money.